What's going on, everybody? Jeff here. Welcome back to the channel. Lot to cover in this video. We are once again seeing another cycle. We bounced off that 38.90 level that I mentioned in the video I made Saturday and continue to move to the upside. Now, there's a couple things I want to go over. One is going to be a chart on funds and large institutions that are net short in the environment we are in right now, and also talk about the cycles. I'm going to break everything down for you. So let's get right into it. First off, let's take a look at this SPX chart. I covered this same chart on Saturday, talking about that 38.90 level, as well as that 39.20 level, saying chances are if we broke through that level, we would get a bounce off 38.90. Now, if 39.20 held, 39.75 to the upside, as well as 40.40. And clearly we have seen that move to the upside. Now, if you zoom out just a little bit, you could look at SPY, whatever you want to look at. But if you zoom out just a little bit, we are still in a downtrend. Okay, this is still channeling towards the downside. After a big move coming all the way back from that, was about 432 from SPY, getting back down to 390, seeing a little bit of a bounce is normal. Okay, now it's amazing to see how many people, you could just get the sentiment and the feel on Twitter, how many people all of a sudden become bearish at 390 when they were insanely bullish up at 430s, thinking, listen, we're going to get to 440, 450. And once the sentiment just sways one way and is heavily crowded, that's when market makers will come in. And you can see, even by the past couple of days, we've got some low volume, medium to low volume, okay, given the time of year that we're in right now. And we just continue to move to the upside, okay? But let's talk about the first thing I want to mention in this video. Institutions bought a record amount in hedges. This is net short, okay? Whether that's, puts, whether it's the calls and the VIX spikes, anything that could be used as a hedge in preparing for a downside. Okay, so institutions are hedging their core positions at a faster time frame than they ever have before, especially as we're leading up to the midterms, which are a short period of time away. I would assume a lot of this hedging is months in advance. Okay, when you're talking about big money, sometimes it could be a shorter time frame, but when we're talking about really big money like this in the billions, you're talking about months of time frame. Okay, time will always hurt you, especially when it comes to anything in the options game. So here's the first cent. All right, we have a massive amount of net short playing the downside, betting towards the downside. Okay, which is also known as a hedge. All right, so that's one. The next thing I want to talk about is when I mentioned cycles. Okay, so let me just jump over to the SPY for you. All right, I think this chart is clear. I'll clear it for you. Every time we talk about cycles, there's a couple things that I want to mention, and I hope that everybody can get a better understanding of this, as I continue to mention this. But high growth, all of your speculative stocks, your stocks that are traded on future valuation, speculation, people are buying based on high short interest, okay, pending news, new upcoming products, okay, FDA approvals, anything of higher valuation speculation. They are the first ones to get hurt when the market corrects, okay? So when we're in that euphoric stage, okay, when everything just continues to go higher and higher and higher, they're the first sector to pull back. It's the first one to dump. Okay. Later on, it follows your cyclicals, your blue chips, your consumer staples, your discretionary, okay, your defensive stocks and so forth. There's a whole other list, okay, that follows after it. Well, in the contrary, when it's the first one to fall, okay, it's also the first one to base and the first one to recover. All right. And back in, I want to say, mid-June as well as mid-March, we went through that high growth cycle. So if we take a look at the SPY, you can see where we are. This is the time frame of mid-March, and this is also the time frame, okay, of, I'm sorry, mid-June, but also in mid-July. I'm sorry, not mid-June, but mid-July. Here we are sitting right here on the 13th to 14th, and we saw a good size rally, okay, in the indices, which everything followed with this, okay? But high growth was the one that really got a big jump. It didn't just get, a 10% boom, a 12%, a 14%. It got a very good jump. And one thing I like to look at, even though I have my own differences when it comes to Cathie Wood, is seeing how the ARK ETF, which is their innovation ETF, which is, pretty much all high growth, okay, how it was basing over this time frame. We've got a little bit of the pops that happened, but it's basing. Okay, it hasn't really broken below that 35. All right, it's been channeling between the 40 and the 52. And if you chart this out a little bit, you'll see that it was the same thing. If you look back here where we are in mid-March, we got that good size pop all the way from about 52 up to a high of about 72. That's about a 40% jump. Same thing happened in mid-July. And if you look at a couple other of the high growth ones, one of them was my favorite was, Roblox. Roblox had a good move. Same thing. Okay. The other one was Coin, which is, Coinbase, which is even seeing another bigger move to the upside. And you can go out and chart all of these out. They're the first ones to see the jumps. If you see the list over here to the left, which is pretty much my most common list, I trade most of these stocks on a given basis, on a daily basis. I like, the more liquid, large caps, especially when it comes to options. But if you look at what is trending up higher, it's not just AMC, which is what I want to talk about, but there's a lot of high growth. Coin, Roblox, Rivian's even had a move lately. Neo, okay, high growth. It's the first ones where it starts to come back. Okay, so when you take a look at AMC, which is up over 10, it's almost up 11% on the day. The chart is looking like it wants to base around that, $8-9 area. We had a little bit of a breakout. Volume still kind of low, better than the past couple of days. It, for a strictly chart perspective, really needs to get over this 1140 before it can start to get into that gap. Volume flows into it. There's a heavy potential. But you combine with what's happening right now inside the market, we're sitting at that 407. We've got that cyclical little relief. Okay, are we going to be able to get above this massive 408 408.50 okay shelf that has been formed over the past 3 months? You can see that heavy consolidation right here. Same thing, consolidation, move to the upside. We even stalled out to the move to the downside. Are we going to be able to get through that? Well, you combine that with massive hedges, net short, okay, which put options, calls on the VIX, whatever they're doing. Okay, they're betting to on a move to the downside, which is exactly what that chart replicates. Also, we've got CPI coming next week. All right, now there's been numerous charts out that have said, listen, the price in August has declined month over month when you're comparing back to July. It's very well known just by anywhere you are in America. While it is different, but you look at anywhere you are in America, you can go look at the pump and you can see that from June, July, August, the prices just continue to move down. The price of gasoline, I think where I am in Connecticut, I just drove by, it was like $3.19 for cash price. Costco was like $3.22, $3.24. All right, so it's moved down significantly. So chances are us seeing that number come in a little bit lower. Okay, now the expectations are going to vary, but a little bit lower, showing another decline of inflation. That could really put a lot of pressure, okay, on these funds that are short. All right, to be able to potentially get even squeezed higher to the upside. All right, and you'll know that when you start to see massive, massive volume coming in better than it is. So it is just, like I said, completely, something to get ahead of. Now, I'm not saying it's going to happen. All right, but these cycles tend to repeat themselves. And if they trip over their feet, that's when it can really, move out of control to the upside. So a couple things to pay attention to are this right here. This is what is being priced into the market right now. So we've continuously moved to the upside, and 90% okay of investors and what is priced into the market is currently pricing in a 75 basis point hike, okay, on the 21st of the month. Now, if CPI comes in much lower, I personally don't think the Fed is going to veer away from that 75 just by the hawkish tone that Jerome Powell, has had over, since the Jackson Hole Symposium, which I will cover further in tomorrow's video. All right, but it really might give that opportunity for them to get squeezed even more to the upside. So keep that in mind. One thing I do want to mention, because it is Friday, but over the weekend and especially on Monday, keep your ears open for anything that the White House says. They have been trying to defend themselves and just get ahead of everything that they can. And if they're not mentioning anything about the CPI running a little bit hotter, okay, or really just trying to completely deter your attention away from the CPI, talking about whatever mumbo jumbo that they're trying to get you to believe. If you're not seeing that, then chances are that numbers is going to come in a little bit lower. Which, like I said, if the investors continue to pile in, that's what things can squeeze to the upside. And it's not just your blue chips, the entire market. The high growth is the one that is really going to get that accelerated move to the upside. So guys, that's it for this video. Stay tuned for the video I make tomorrow. It's going to go over another weekly recap. The last 4 have been pretty pretty spot on. All right. And so if you're looking to continue charting your levels, wanting to see some of these moves, please check it out. So that's it for this video, guys. I'll see you in the next one.